One of the very first questions that I get when I'm talking to a new client is, what's your rate? Because they've likely called around and talked to other lenders. And one of the things that as a borrower you need to understand is that when you call and ask that question, every lender is going to assume that you want to get the best rate you possibly can. So they're going to quote you the best rate. They're putting you, because they haven't taken your credit, they haven't looked, they don't know what you're putting down necessarily. They don't have your debt to income ratio. They don't have any information. You're just calling and saying, what's your rate? Well, all right, my best rate is, and they're going to assume you're in the best class, got the best credit, but the most money down. So that's because they want your business. I want your business too. So when I ask you, tell me about what you're trying to accomplish, there's a reason, because I want to quote you the best rate I possibly can, but I want to be realistic about quoting you a rate, because part of that rate quote component is a little thing that we call loan level pricing adjustments. There are a lot of moving parts to quoting an interest rate. Is it a purchase? Is it a refi? If it's a refi, what's the loan to value ratio? Is it a cash out or no cash out? If it's a purchase, how much are you putting down? All of those things count. What's your credit score? Remember, credit scores have plateaus. 680, 700, 720, 740. You need to be above 740 to get that best rate possible. In summary, when you ask somebody, what's your rate? They're going to quote you the best rate because they want your business. They feel like if they quote you the best rate, you're not going to go anywhere else. Or if you do, you're going to say, hey, so-and-so quoted me X, but they didn't know anything about your loan. So when you ask the question, make sure that someone understands what you want to accomplish in your home purchase.